Good morning, good afternoon, and welcome. Thank you for joining us for today's call entitled Payments in Asia, Who's Winning the Race to Cashless, which is brought to you by Equinix and Kapronasia. I'm pleased to report that we've got about 150 participants on our call today. People on the call are joining us from Hong Kong, Singapore, Australia, even one or two from China. So fantastic audience that we've built. Thank you. My name is Mary McHale. I'm the Financial Services Business Development Director for Equinix Asia, and I will be moderating today's webinar. In Asia, it would seem that there's no question about the future possibility of a cashless society actually becoming reality. It seems for all of us that China is going cashless. China's consumers spent a total of 5.5 trillion via mobile payment platforms last year, which is about 50 times more than their American counterparts, who spent around 112 billion. And this is according to data from Forrester Research and iResearch. The payments landscape is evolving rapidly with new ways for consumers, retailers, banks, and corporations to move money. And although the traditional debit, credit, ACH, and wire transfer rails all remain in place, the ecosystem that uses them has vastly expanded due to the advance of fintech, open APIs, and enhanced mobile technologies. Traditional infrastructures that were not necessarily built to manage the complex network of new relationships that may come from these new products, new partners, acquisitions, or global expansion are being challenged by the fintech players, many of whom were born in the cloud and delivering the promise of a new user experience. It's not only technology that's driving the change, however. There's also been a shift in demographics, consumer behavior, and regulatory influence that is supporting the high levels of innovation we're seeing today across payments. So the opportunities for debate and discussion in this space are actually endless. And at Equinix, we've introduced a new forum called EPIC, the Equinix Payments Innovation Council, to do just that. Our council consists of senior business and technology leaders from the payments industry who meet on a quarterly basis to make new connections, share ideas, and discuss challenges that support their meeting the new demands of the rapidly changing digital economy. I'm pleased to have three of our council regulars join me to share their views on today's call. In this informative 45-minute webinar, we'll look at the challenging nature of payments in Asia and some of the implications for the future. Each of our four panelists will share their news on both the challenges and opportunities that the race to cashless is bringing. Today's session is being recorded and is run in listen-only mode to lessen the amount of background noise and distraction. However, we really do want to encourage your participation and welcome you to submit questions throughout the webinar. The format for today's call is that I will lead a brief discussion with our panelists and then close the call with responding to the additional questions that were raised from you, the audience, throughout the time we're together this morning. So to facilitate the discussion, we'll use three features of the webinar software. Hopefully you all have this up on your screen. The first is a viewer window off to the right-hand side, where you'll see the profiles of the panelists and the polling questions, and which I recommend maximizing now so you can see it in full screen. Sorry, that viewer window's in the dead center of your screen. The second is the control panel, and this is where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you're welcome to submit questions and comments throughout the course of the presentation. We will address as many of these as time allows at the end of the panel discussion. You will see a heading for polls on the control panel. We will raise three polling questions during the webinar this morning, and you'll see these questions both in the viewer window as well as in the control panel. You can submit your responses via the control panel. And if time to tabulate all of your results, we'll share them out at the end of our call. So with all of that housekeeping out of the way, let's get started. I'm going to keep the introductions of our panelists quite brief today. Suffice it to say, I'm extremely honored to have four experts in their fields here to share their insights. From the top, we have Philip Glickman. Phil is based in Singapore and is the regional head of commercial payments for MasterCard in Asia Pacific. In his role, Phil is responsible for the management of commercial, SME, B2B solutions, and partnerships as they relate to commercial products. MasterCard is a current client of Equinix. Next, we have Alan Conder. Alan is based in Hong Kong and is the founder and managing director of the IPG group of companies. IPG specializes in the delivery of high availability, full service, and state-of-the-art payment gateway solutions to licensees around the world. IPG is also a client of Equinix. Thirdly, we have Mayan Lim. Mayan is based in Singapore and is the current executive director of the Asia Cloud Computing Association. ACA, for those of you who might not be as familiar, is an industry association which represents the voice of the tech and cloud computing businesses in Asia Pacific. And they do this through thought leadership, government relations, and stakeholder outreach efforts. Equinix sits on the advisory board for FIS with ACA, as well as a member of, serves as a member of their board. Our final panelist today is Zenon Kapran. Zenon is based in Shanghai and is the founder and director of Kapronasia, one of Asia's leading providers of research and consulting services, focusing on the financial services industry. Kapran is also a longtime partner for Equinix. So to kick things off, it's time to get a little bit of audience participation going, and we're going to put up our first polling question. And yes, I've decided to start with a very easy one. So the first question is, what are the key drivers of adoption for digital payments? Is it improved security, convenience, regulatory changes, faster internet connectivity, or all of the above? Again, a quick reminder that you can answer the question in the polling tab in the control panel to the right of your screen. So Zenon, let's start today's panel with getting a bit of perspective of what's happening in China. And it's hard to miss the headlines today, especially as it relates to payments. So I want to share your statistic, which is according to a report released by Kapronasia in 2012, the Chinese mobile payment market that was worth $7.6 billion and serving 218 million mobile payment users at the end of 2011 was expected to be worth more than $84 billion and have 441 million active users by the end of 2015, virtually doubling in size each year. I read something just recently that said the actual active user base in China on mobile payments adoption is more than 469 million users. That compares to a US base of 12 million. Quite starking statistics. So Zenon, can you help us highlight and tell our audience what you think enabled China's incredible shift and adoption in mobile payments?
Thanks, Mary. It would be my pleasure, and thank you everybody for attending today's webinar as well. I think the stats that you highlight really give kind of a high-level view of what's happening, but really being on the ground here in China, the proliferation of mobile payments and the way that everyone here, including myself, use them on a daily basis is fairly incredible. Not only do we use them for things, for making e-commerce purchases online, but also used in offline stores when we want to purchase something as simple as a bottle of water. So that shift in usage for mobile payments, China is really leading the world. From the stats that you mentioned in terms of transaction volume, value, it's quite incredible here in China compared to everything that's happening everywhere else. Most of that shift has been enabled by a couple of different things. Firstly, smartphone penetration. So smartphone penetration in China is about 72%. And when you compare to PC penetration, we would expect in the US, PC penetration is about 82%. So meaning that 82% of households have a computer in their house. Here in China, that number is more like 50%. So what that's an indication of is the fact that for many of the Chinese users, the main device of choice is their mobile phone. And so that really affects the way that they're using their mobile phone and their primary device. That has really been enabled by the fact that there are countless Chinese manufactured smartphones here that are very accessible to everybody in the market. Given the addition of the e-commerce market and the way that Alibaba launched Alipay initially to solve a problem of escrow, but then expanded beyond that, we have a number of technology companies that are really being innovative in the models that they bring to market. So it's really a combination of the user base that's there, the technology players that are bringing these models to market, and the friction that was existing in existing payment methods. So when we look at a card payment about a year ago, we have chips here in China, but it would be chip, PIN, and signature, which means that's about a minute that you're spending completing a transaction, whereas with mobile payments, you can narrow that down to about 10 or 15 seconds. So that friction was kind of the last step, and those three factors really fueled the change here in China and the shift to people using mobile payments and the adoption of mobile payments.
Interesting. From your perspective then where does it go next? What happens next in China? Where does it go from here?
Well, I think what we've seen with these mobile payment platforms is they've become lifestyle platforms. So when you look at something like Alipay as an example, if you open up the Alipay wallet, not only can you make payments, but you can book a taxi, you can use a shared bike, you can invest in wealth management products. So what Tencent and Ant Financial have done with their mobile wallet products is make them much more than just payments, to include all of these lifestyle products. And so really that's the direction the market has gone. Now, platforms are here in terms of those lifestyle platforms and people using their mobile wallets for much more than just payments. What's coming after that is AI and data. The amount of transactions that's going through these platforms gives these technology platforms an incredible amount of data. And on the back of that, that gives them the opportunity to introduce new products and services supplanted by AI to better pick out what the customers are looking for. So really we'll see this shift from platforms to smarter platforms as we go forward.
And that could lead us down a whole different conversation. But to stick to the script today, we are going to get some regulatory insights from Mei-Ann later in the call, but I'm just curious, in your view, did the Chinese regulators help or hinder the growth of the homegrown giants in China?
It's been interesting to see. I mean, the regulators initially had a very wait-and-see approach to a lot of what's happening within fintech in China. So initially, if you look at things like peer-to-peer lending first started in 2007 in China, but we really only saw the start of regulations around 2015. Why is that? Well, to a large extent, peer-to-peer lending helped the industry. So shadow financing is a big issue here in China. If people are using peer-to-peer platforms, it doesn't solve the issue of shadow financing, but it brings a lot more transparency to it. So the regulators have had this very much wait-and-see approach where they allow innovation to happen, and then it gets to a point that they feel that they need to ring fence it a little bit. So the peer-to-peer regulations, if we look at those aren't overly constricting, but they do make for a more solid market so that the market will grow without many of the challenges that we've seen in the past. So it'll be a more stable growth and a growth that's more compatible with a kind of a harmonious financial services industry going forward.
Interesting. Mei-Ann, we'll get from you kind of the rest of the regional perspective on regulators. So thank you, Zenon. It looks like it's now time for our second polling question. So if we can look at our screens, it is, what is the estimated value of global payments, so not just China, but global payments that will be made using mobile devices or wearable technology by the end of 2018? Is it 84 billion, 95 billion, or 35 billion? So listeners, feel free to cast your vote. I'd now like to shift gears from China and get a more global perspective from MasterCard. And MasterCard is truly a leader in the cards and payments technology space. So Phil, you're on deck. And I thought we'd switch gears a little bit and talk about that, the shift and the demand for change in payments isn't just coming from consumers today. So can you share a few things that MasterCard is seeing in the development for B2B procurement, B2B payments? What are the trends that you're seeing that are helping companies and government capture some of those flows?
I think the reason why B2B, why digital is so, there's such urgency around it. One of them is quite clear, particularly in the emerging markets. Governments, you can't track cash. It's hard to get information on cash to identify flows that are taxable and so on. So that's one reason why governments are very, very focused on this. When you talk about how you enable B2B flows, I think we have to remember that the original card environment was designed essentially for consumers. So it was basically had consumer parameters around it and so on when it gets to chargeback and so on. I think what we've seen with the evolution of digital B2B is identifying flows and identifying a merchant base that will be enabled to accept B2B payments. So in many cases, when we talk about B2B, this could be a merchant, for example, in Jakarta that sells products from, a Unilever or a Procter & Gamble and so on. And they usually deal in cash. And you have millions upon millions of merchants like that, not only in the developing markets, but worldwide. Getting them into the, for lack of a better word, B2B ecosystem is important. I think the way you do that, Mary, is you reduce the cost associated with getting all of these merchants into the digital system, into the digital process. And that means moving cash aside, getting an infrastructure in place, and then moving forward. The infrastructure in place, though, isn't a traditional point of sale device as we saw, but that's changed where it can be, for example, a tablet, it can be a quick a QR code, and so on. So I think to answer your question is, there's a new merchant base there. Enabling them to participate in these B2B flows is important, and reducing the cost associated with their participation. And we're seeing that not only in developing markets, but we're seeing that on a worldwide basis.
Yeah, and certainly, as noted by the regulators in controlling some of the interchange. Interesting. Phil, let's stick with the business side of the equation and share a few thoughts on the SME vertical. Obviously, they're a key driver for economic growth across the Asian economy. So how is digital transforming in this area?
Look, SMEs provide the foundation for growth for all economies, whether it be established economies like those in North America, or whether it be emerging ones like here in Asia. You know, today's large corporates were yesterday's SMEs. I think one of the things that digital addresses with SMEs is cash flow. Many times you have companies that are starting off, fintech, startups, what have you, have great ideas, they're growing quickly, but cash flow is a problem. And I think what the SME strategy is now for digital, and that's not only for MasterCard, but for people in this space, is to provide solutions that give more data, but also allow these SMEs to manage their cash flow, give them a little bit of breathing room. So in that regard, you expand the time frame regarding when they have to pay their bills, you give them more data, you give them more information, you give them more analytics that allows them to get a better understanding of who their suppliers are, who their customers are, but also give them some breathing room on the cash flow front. And that is done utilizing multiple digital solutions that I can jump into a little bit later.
Yeah, absolutely. And I've seen a couple of those instances here in Hong Kong. So interesting space in supporting that, even through third parties receivable financing. My last question for you, Phil, is having to do with alternative payments. And for reference, I am referring to payment methods that are used as an alternative to credit card payments, not necessarily cryptocurrency. So what are the trends, Phil, that MasterCard's seeing in alternative payments?
Well, I would say, you know, coming from a banking background as you come from, there are very traditional names, and I won't mention them, but very traditional names when it comes to how to transfer money from one bank to another bank and so on. And those traditional processes had traditional costs associated with them when it came to the bank that was sending out the funds and the bank that was receiving them. And there were also sometimes limitations regarding the data that could be attached on such transmission of funds, and also the timing, how long it took. I think what you're going to see in that space is that the costs are going to go down when it comes to remittance or transmission of funds. The amount of data that can be associated with such transmissions is going to increase exponentially, and the timing is going to be, if not instantaneous, within minutes as opposed to 24 or 48 hours. I think you're going to see a big change very quickly coming in that space, and I would say in the next couple of months, actually.
Interesting. Interesting. We'll keep our eyes open. Thank you, Philip. So let's move on to a solutions provider perspective. So Alan, you've been working in online payments since 1997. Which actually, when you think back on it, was still early days for both customers and merchants in terms of experience and adoption. And if you believe some reports that are out there, the first online purchase was made in 1998 from Pizza Hut for mushroom and pepperoni pizza. So if you fast forward to 2017 in the iPhone, where we're all equipped with a mobile wallet app that's built in and ready for our use to buy far more than just a pizza. So let's kick things off and just start with getting your perspective in from the IPG lens. Is how have you had to evolve or tailor the IPG platform to suit the unique needs of Asia? And you can compare and contrast that to maybe Europe.
Sure. Thanks, Mary. I guess Europe, an obvious thing to say, is a very different market than Hong Kong and Asia in general. In that case, it's much more mature, and I'd probably say more traditional when you're looking at Asia in general. When we started IPGPAY, which is based in Hong Kong. We spent a lot of time listening to what merchants and consumers wanted to help them take advantage of exploiting the opportunities around online payments in this particular region and also globally. And we've then adapted or developed new modules within our payment platform to suit their needs. So if I look at one example of that is a product we call PayLink, which we've developed based on local demand in this particular market, which enables merchants to send an email, an SMS or WhatsApp, whatever method they wish to use to their customers. And that may be a business to consumer or a business to business transaction. And it may be something of a generic promotion or simply to pay an invoice. So in this scenario, when the consumer selects the PayLink, they're redirected to a fully customized payment page that may be on their computer screen, their tablet or their mobile device, from which has all the merchant's branding and look and feel, and then the consumer can go ahead and make a payment online with their choice of payment method. For us, this has been a very successful launch, I guess, of this product in this market. It's allowed merchants to easily adapt online payments, which for them has probably been their traditional business and something that they've had a little bit of trouble moving into. So for this PayLink product, for example, it means that they can keep to their traditional accounting and payment methods, but also with very little investment and technical capabilities can offer their consumers the option to pay online. I guess I'll look at another example of that. We've got a virtual terminal, which was very popular in Europe and North America in the early days. This is a product that allows people merchants to accept payments over the telephone I should say, mail order, telephone order. That's really probably died off quite a lot in the European markets in particular. But here we've actually seen a revival of that once again with the V terminal and the PayLink. It's really enabled traditional merchants that haven't been able to, I guess, jump onto the online payments to start offering an online payment solution for their consumers in a very simple and cost-effective manner.
That's fascinating. Interestingly enough, I started my year speaking on a panel down in Australia, and one of the statements that came out quite loudly from the audience, and it was merchant representation, was, hey, stop the number of terminals you're expecting us to set up and actually have our employees learn how to use and operate at the point of sale. So it sounds like PayLink is onto a great opportunity. And again, really supporting that whole notion that cash is disappearing and payments are going digital mobile. So when you read about payment trends and you attend conferences and anything, anywhere you look today, this term disruption keeps coming up more and more. And I just would like, Alan, from your perspective, given the amount of change in the industry, do you think this term is still relevant?
Sure. An interesting question. I mean, I've been working the online payments for, I guess, close to 20 years now, or a little over. And over that period of time, I guess I've seen continual and very rapid change. It is probably a little more so over the past 10 years. In fact, I definitely would say a lot more on that. But disruption for me has become something probably a bit of an overused buzzword. However, I do also understand its relevance. Change is happening constantly in this industry, and I see part of our role as a gateway provider where we're connecting merchants to payment methods in the back end. I see our role is to really ensure that we have as many of these mainstream alternate payment methods available to offer merchants in particular regions so they can maximise conversion rates and give their consumers their choice of payment they'd like to use. And whether that's, as I say, mainstream credit cards and Apple Pay, Android, wallets, Bitcoin, Ethereum, to us it doesn't really matter what that underlying payment is. It's really our role, I think, to ensure that we present those options to the merchants, consumers, to maximise conversion and our sale rates.
That's fascinating, terrific. And I love that you're connecting merchants. I liked how you position that. Final question, and you just mentioned Bitcoin and the whole cryptocurrency. So can you share your predictions for the three biggest changes that you see coming up in the payment space in the next, let's call it 3 to 5 years, and who, from your perspective, might be the biggest winners and losers?
Sure. 3 to 5 years is going to be a long time in this industry, I think, where we're at now. I guess I think the continuing advancement of alternate payment methods and wallet solutions will continue to increase. The cashless society, there's no doubt, is well and truly here, and also is the exponential growth of online payments around the world. I think if we look at new players coming in, I guess some predictions, and that's traditional banks are definitely well and truly starting to come up to speed and adaptively. They're adapting and they're offering and their products to the merchants they currently have and wanting to continue to serve as us. For example, here in Hong Kong, we're working closely with HSBC, who are implementing, driving some pretty exciting initiatives to really bring their banking platforms into the digital and online world. I guess the last thing I'd say on that is probably industry regulation will continue to increase and evolve, which I think is mostly for the good. It does have some downsides, as any regulation does, but I think without this, mainstream e-commerce globally would and will continue to struggle. If I look at the biggest winners and losers, I think probably the merchants that adapt to technology are probably going to be more likely to be the winners. Again, I guess I say from us as a provider, and enabling and offering all these new payment methods coming up is very important. I think merchants being able to offer those to their consumers is going to continue to be important to keep up with. If I look at losers, and this is something specifically in this particular market that we found a lot of, is merchants are probably not taking seriously the importance of security, PCI DSS, and the storage of card data and personal data there. So for us as a payment gateway, we've been PCI compliant at a level 1 since 2004. For us, that's really been an incredibly important cornerstone as we've grown to make sure that we can offer merchants secure storage of card data and allow them to continually use it for recurring payments or whatever the case may be.
That's interesting and somewhat concerning. So thank you so much, Alan, for your comments. I mentioned in my introduction that Mayan and Eka work across the industry to accelerate both cloud and new technology adoption across Asia. Something that was really interesting that I've learned from working with Mayan is that the barriers to adoption actually sometimes come from very surprising sources, and sometimes simply require more education for everyone to really understand the new technology and the new space that the digital economy operates in. So the regulator is probably, in my perspective, one of the most well-known, but perhaps least understood cogs in this wheel. So Mayan, time for your views. Well, we see, there's a big shift, obviously, in Europe with going to PSD2. We've got it with open banking. We've got regulation on interchange fees. So from your point of view, Mayan, what's the role of regulation in ensuring that the payments market continues to develop?
Well, I think that thanks, Mary. I think that the idea that the regulators are trying to protect is definitely the one rule, which is don't break the system. I think we've seen a lot of innovation come on board. We've seen a lot of disruption come on board. I think that the regulators, from what I've seen, regulators tend to be very supportive of disruption and innovation and any new things that come along with, especially with technology. But I think the rule still stands: don't break the system, because if you break the system, or there's some sort of unintended, unforeseen situation which causes financial markets to sort of tremble a little bit, I think that has massive repercussions on most people in that particular country. So I think that the rule that most governments are trying to continue to uphold is don't break the system. So, but one of the things which I have seen, at least not just in Europe but in Asia as well, that there is a lot of support for new ideas, and I think that just looking at what was said earlier, a lot of the payment systems in Asia are definitely moving very, very quickly. I think that it had started even before we're talking about things like mobile payments and e-payments, etc. I think it started all the way back when we allowed for cashless transactions in the first instance. So everything that has been built on since then, has basically been in support of the idea of cashless payments. And we only need to look so far as stored value cards. For example, you've got the Octopus card in Hong Kong, you've got the EasyLink in Singapore, you've got the Opal card in Sydney, and I think that I can go on mentioning all sorts of cards because I quite like the idea of stored value cards. To see the precursor to where the government and where regulators have actually been supporting non-banking and non-traditional financial industry companies to apply for financial licenses to enable this sort of payments. And we're seeing a lot of drive in this respect throughout Asia. I'm going to pause there in case anyone has questions or in case you want to ask me for something further.
Yeah, no, I think that's terrific. And look, we could again take this conversation in a million directions, but I'll just put an additional layer on that. Is that I think certainly from the perspective of Australia, Singapore, and Hong Kong, is each of those regulators have opened up and created a sandbox environment that further enables this whole notion of fintech collaboration with the banks and really allowing the regulator to get a better handle on what are these changes. And then if you draw it back to Alan's point of, making sure that the consumer's data is absolutely, protected and secure. And, I guess my final thing is the regulator also in many ways could be seen as the driver of integrity. But let's focus for 1 minute, Mayan, because the biggest area that I think has the most confusion is cloud. And is cloud still an uncertainty for the regulators? And where do you put them on the scale of adoption for cloud technology?
Yeah, cloud computing is an interesting space. I think in the initial years, what happened was that the regulators tend to err on the side of caution when it comes to new technology, especially with cloud specifically. So there was a lot of silence. So in that sense, it wasn't uncertainty about the cloud, but rather it was a lack of information that caused the uncertainty. It wasn't uncertainty because somebody was saying something that saying we support cloud or not. Basically, it was just silence on cloud in general, on cloud use. And I think that was driven by a lot of fear about what it would mean if you actually stood up and said, as a regulator, yes, we will allow your banking, core banking or core financial functions to be put onto cloud. I think that what has happened over the last 2 years, 3 years, is that the regulators have gotten their heads around the new idea of cloud, and instead of saying, putting down a very technologically not neutral, very specific regulation around, yes, we will allow cloud, what a lot of regulators have gone down the track of is move to update their risk management and outsourcing guidelines. So we've seen that in Singapore, we've seen that in Australia, we've seen that in Philippines, we've seen that in Hong Kong, we've seen that in Malaysia. I know a lot of other countries are also looking at that. So rather than saying that we allow cloud, rather than looking at it from a risk management perspective and saying, hold on, I think we will allow cloud, but let's not call cloud. Let's just say, okay, for new technology and other similar services that can be outsourced, let's look at how we can control and continue to put safeguards onto these arrangements. And that's, I think, the general track that has been taken. The one track which I think, the one country which bucks this trend is Korea. I think South Korea actually put down rules that says, actually, yes, we will allow cloud computing. But I anticipate that will probably sort of morph back into the risk assessment guidelines, because ultimately their guidelines were all about informing the regulator that they had moved onto cloud. So ultimately, it is still a risk management assessment. So there's a lot of support there. There is a lot of clarity that has come forth as regulators start speaking about the cloud. And I think last year at the MES FinTech Festival in Singapore, there was they dedicated one big slide that said, MES does not prohibit cloud, and I think that was tweeted a couple of times, and I thought that was one of the definitive ways in which regulators have been trying to communicate that no, they're not adverse to new technology like cloud technology, but are very supportive of it.
That's fantastic. And one of the challenges of working in Asia is, unlike the US, there's different regulatory requirements for each and every country, and kind of a different perspective and a different character, if you will, of the regulator. So do you see the regulators across Asia in any way moving towards more uniform requirements when it comes to data privacy or cloud technology? Mayanne, are you still with us?
Yeah, I am here, sorry. Yeah, I think that there are a lot of, I think that it's a little bit doubtful at this point whether or not we'll be able to move towards a harmonized regulatory regime, because I do know that a lot of countries are simply at this moment putting in the regulations for protecting data privacy, and they're working through the kinks within the national system at the moment. So, you know, a lot of implementation guidelines and frameworks have just been implemented. So, for example, in Singapore, I know that we've just started, and there's a lot of kinks to be worked out in the first instance. But at the same time, in tandem with that, a lot of regional agreements are being made. So the APEC cross-border privacy rules and regulations are moving in place. And I know that on the regional organizations level, there is some discussion about whether or not there can be some cross-mapping between the Europe GDPR and CBPR for APEC. So if that happens, then we'll see that process accelerate very quickly. So the answer to your question is no, I don't see it happening anytime really soon, but once it starts, it's going to accelerate really quickly.
That's fantastic. That's good news for all of us out there, especially when we're operating on global platforms. So thank you, Mayanne. Participants, audience on the phone, it is time for you to now have your final participation from the poll. So if we can get that question up. We also have just a few minutes left of time, and I'd really like to open it up to any Q&A that we've received in from our attendees. So Zenon, thanks for putting up the poll question. So who will win this race to cashless? Will it be China? Is it India? Is it Hong Kong? Or you think it's somebody else? Or there will always be a need for cash? Audience, please put in your questions. And Zenon, do we have any questions that came in over the course of the conversation?
Yeah, thanks, Mary. There have been quite a few that have come through, so let's go through a couple of those. The first question comes from Edmund, and so Edmund is asking, what can we as a collective whole do to support or influence the regulator to provide greater support for the changes around payment regulations?
Great question. Thank you, Edmund. Mayanne, because it's regulator, I'm going to flip it to you, but Philip, I'm also quite keenly aware that MasterCard does a tremendous amount of work in this space. So maybe just a quick response from each of you.
Thanks, Mary. I think that we can definitely be lobbying the government for more clarity. I think as an industry association, what I try to do is try and say, okay, it's not just me making noise, it's actually me and a whole stable of other companies actually making the request for more clarity. And can we offer, for example, the regulator that we work on something that works for us and we present it to you. So that's actually the role that I play as the ACCA's executive director. So not to sell snake oil in the local parlance, but if you want, please come and join us at the ACCA. Over to you, Mary.
Thanks. Phil, anything that you want to add?
Look, I think governments play a big role in driving this because they have such massive public sector flows. I think the way they've shown a tremendous amount of interest, but in many cases, or in some cases, it can be as new to them as it is as new to us. I think, to Mayanne's point, working with them when it comes to policy, transparency, when it comes to risks, when it comes to benefits, when it comes to what the expectations are regarding execution, I think that's very, very important. We're seeing a lot of work that governments are doing to digitize flows. In Singapore, for example, the National Trade Platform, in Australia with MPP, in the US with SmartPay. So I think they're very, very able and willing partners. I think the key thing is communicating the transparency, identifying the flows, documenting execution, and clearly identifying risks.
Yeah, great points. Great point. Zenon, I think given the time, I'm looking at it and watching it quite closely. Do we have a chance that we can bring up the poll results?
Yeah, let's bring up the first poll result.
So the key drivers of adoption of digital payments. Interesting, convenience being one and all of the above being the top two answers. The correct answer was all of the above. Excellent. Next. What was the estimated value of global payments that will be made using mobile devices or wearable technology by the end of 2018? Congratulations to the 61% of you that said 95 billion. That came from a recent study that was released by Capgemini. That's a pretty staggering amount when you think about it. Let's flip to our third and final poll. And who will win the race to cashless? Huh. Zenon, it seems that everybody's on your side and has picked China for today's call. So look, before we close the webinar, I just want to make an additional comment. That's something I really believe, that the future of payments and the race to cashless really depends on all of us. And it depends on all of us really working and demanding integrated settlement and clearing systems, and that we really focus on creating platform agnostic channels that allow maximum client access, maximum flexibility, and at the end of the day, user convenience and an enhanced, enriched experience. So the future of payments requires a lot of new conversations that will lead us down the road of interconnection and collaboration. We hope that many of you will join our future discussions at our Equinix Payments Councils. And before I close, I do want to thank each of our panelists for a very engaging discussion today, and thank each of our listeners for your interest and participation. That brings our panel to a close. We will be sending a follow-up note with a couple of research reports that support today's topic, and encourage each of you to reach out to any of us to learn more and continue the conversation. Zenon, with that, I'll close and hand it back to you.
Great. Thank you, Mary. And thank you, everyone, for attending today's webinar. We'll be posting a recording and a summary of the key findings in the next couple of days that will be sent out to all of you, as well as the registrants who are unable to make it. Thank you again, and we hope to have you on a future webinar from Kapronasia and Equinix.
Thank you.